Good segue into our calls of the day, with which begins with Invitation Homes, which got upgraded to outperform today. Was at neutral, and that was at Mizuho. The price target moves up a little bit to 36 from 33. What do you think, Josh?
Yeah, so the way I own Invitation Homes and other REITs is in my own IRA, because I don't want to pay the higher tax on the distributions. But this is a 3.5% dividend yield, not high for a REIT, but I think it has a better growth story than most REITs. This is single-family rental homes. They have a portfolio of 80,000 homes in desirable suburban locations, mostly in the South and in the West. It's annualized at 8% a year total return for the last 5 years, so the dividend is important to that calculation. And the stock has really bided its time in this low 30s level. I think ultimately it breaks out when people feel better about the housing market and they want to own REITs again.
What about Pfizer, which was reiterated today as an underperform at Wolf, which you own as well?
Yeah, it's not like the worst stock on earth. It stopped going down, interestingly. It's not going up like a lot of healthcare stocks did from the start of this year, so I missed out on that rotation by literally owning the worst healthcare stock in the world. But 18 times trailing PE, 10 times trailing EV to EBITDA. They've had huge earnings challenges because they bet the ranch on COVID, and that ship has sailed. They haven't replaced it yet with a robust enough pipeline for people to start taking their estimates higher. But that's, I think, how I get bailed out of this thing. I'm flat. I don't want anyone to feel bad. I have much worse stocks. But just the way that this company is being treated by investors right now, it's like a ghost. But I think ultimately this is the type of stock where when it does turn, it'll move too fast to catch it. And so that's what I'm positioned for. And I don't think it can get worse.
Bryn, let's do Roblox real quick, because it's pretty clear that MoffettNathanson hates this stock. They reiterate sell. I mean, I'm just telling it like it is, people. Price target goes to 40 from 34. However, again, 40 from 34, so they bumped the price target, but they reiterate the sell. They talk about Roblox as a problem, they say. Too much unpaid engagement, needs advertising growth to come quickly to justify the valuation at which it currently trades. And the demo, though evolving, is not mass market and likely won't be anytime soon. The business today is nearly 100% funded by just 5% of the audience. That doesn't sound like a stock that you still want to own.
Yeah, I mean, none of this is new news. I actually read the piece, and his price target aside, I thought it was actually a balanced piece. And I think that when you look at a company like this, his risks are actually also the opportunities. And at the end of the day, he is saying that they are not going to be able to monetize ad spending, which Dave Baszucki they have been very judicious on that. And I think one of the reasons is they don't want to disrupt the player experience. And so that is a risk that over time they cannot broaden that advertisement base. I think they will. I did think it was funny, though, because he said 81% of the users are under 25, and so that's not mass market. I don't know what better demographic you could have between under 25. And so I think that he also raised his earnings guidance, quite meaningfully. And so I think with a company like this, where I see the positives, I see huge growth in Asia. It continues to be one of the stickiest platforms. Okay, they do gaming, but platforms. And I think, Dave and team have been really clear that they are going to be slow rolling out the ad spending because they want to do it right. And so for that reason, I'm definitely not selling the stock on this report. If anything else, I think it balances out what one person sees as risks, other people see as opportunities, which is how I view it today.
All right, we got you. That's why there are two sides to every trade. Bryn, thank you.